Hey everybody, Courtney Smith here with our March 27th, 2023 edition of Wall Street Winners. Well, we're back to the bull case here for sure. A little trepidation, but our indicators keep moving back. And of course, we follow our indicators because they've proven profitable for decades, not years, not months, not weeks, not days, but for decades, they've been proving profitable. Now let's just start here with the S&P. So on our blog, CourtneySmithBlog.com, we put out a very, very bullish story a few days ago. We're starting to see rallies here. That's good. But the purple predictor is not that great. You can see that we started to fail over here in December. The price started moving up. Purple predictor did too, but not as much. In other words, the smart money was buying, but weakly. Then we see over here during this period of time, from the high down to the low we made a few weeks ago, you can see that the price is moving lower and the purple predictor is moving down a little bit more. And here the price made a low. Here the purple predictor didn't make a low for a few more days. So once again, a symbol that the smart money is not that keen on this bull market. Now, since then, I'd say the purple predictor is actually turning a little bit bullish. Notice how we're moving higher, but the price action recently been a little bit lower. So once again, I take the smart money over the dumb money, which is what the price represents. So no, I'm joking there, but I think this is turning a little bit bullish after having been bearish for literally 3 months. Let's take a look over here at the Dow Jones. Very interesting. So we're going to look in the upper right-hand corner here, and we see the little red line. It shows selling pressure, and selling pressure's come down a lot. Buying pressure was going up, but now it's going down as well, and actually going down a little bit more. So over here in the Dow, it's just kind of can't get excited. S&P a little bit bullish. Dow Now why the difference? Well, wait a minute. Let's go to the Nasdaq. Nasdaq, completely different story. Look at the purple predictor. It was never really bearish here. It was right on top of the price action. And since the low back here, it's skyrocketing, moving to new highs, new highs, new highs. Even when the price sold off a little bit here, purple predictor moved to new highs and has moved to new high move. It even surpassed the high we made at the beginning of February. So the smart money's buying Nasdaq, tepid buying for the S&P, not buying at all the Dow. Why? Because the Dow is 20% financial stocks and less than 4% of the Nasdaq. So the financial stocks are really weighing on the Dow. But here we see the Nasdaq, which is not financially oriented at all, skyrocketing and looking great. Now, let's take a look over here. We broke below our seasonality indicator. Now, we just broke down a little bit, but our rules are that if it breaks below our seasonality trigger, we have to stop doing double-sized positions. Now, of course, we haven't bought any stocks for weeks, so it doesn't really matter. But if we get buy signals, and we do have, for fully paid up members, we do have new trades this week, some really good ones, in fact, but we're not buying them double. Now, I'm going to start, we'll look and see if we can get this back to a buy signal, but we can't yet. Now, one of the things that's interesting here is notice the purple predictor was very strong here. It was going up while the price was going sideways. It's coming down, but it's way above the price action. And once again, that's bullish. The purple predictor is just our fancy name for on-balance volume, and it's saying that the smart money is buying these small cap stocks. Seasonality, bullish, bullish, bullish. Now, so far, actually, seasonality has actually worked very, very well. The difference between what's happened in the real world and what the seasonality suggested would happen was simply more extreme. In other words, from January up into these highs in February, it skyrocketed up and then it collapsed down And now we're starting to rally back up again. So the timing has been perfect, but the price action this year has been more extreme than what we would think from these years past. No change in asset allocation. They're buying both stocks and bonds right now. Stock market risk indicator coming down. So once again, they don't want financials. They seem to want high-tech, biotech, the NASDAQ type stocks, but I think they also want consumer discretionary stocks like Tiffany's or Coach, luxury items, things like that. So we're seeing still a contraction in not wanting to take a lot of risk. So this is mildly bearish for the market. Global shares also rallying here. Now, something very interesting here. Now, we've had this negative yield curve for a long time, and for the last several weeks, it's been going back more negative, which is, quite frankly, bearish for the stock market. It's bearish for the economy and bearish for the stock market. So this is one of the things why I say I'm a tepid bull right now, not a wild-eyed bull. I'm still bullish, but just I'm not ready to go mortgage the house, okay? Well, okay, if I was really bullish, I'd mortgage my house. But if I'm tepidly bullish, I'll mortgage your house. But I'm just tepidly bullish, so I might mortgage your house to buy stocks, but I won't mortgage my house and take that much risk. Here you go. Now, this was put together by Chris, my sharp-eyed helper, assistant here. Now, here's the interesting thing. So this chart goes all the way back into the early 1990s. So we had a bubble which was popped here, .com, when we went to a negative yield curve. The housing bubble in 2007 was popped by the negative yield curve. COVID popped by that. Over here we have multiple bubbles that we've popped. We've talked about them. Stock market, crypto, housing were three gigantic ones. But when you see these negative yield curves, it's really bad for the stock market. It's really bad for the economy. And we have to take that into account. Bonds moving higher. Notice the purple predictor, which was on the price action, has now detached from the price action and has gone and made new highs. So we've been telling you this for a while. We're going to see bonds make new highs. That means interest rates are going to go lower, which means the yield curve will get more inverted until the Fed starts to cut interest rates. But look for bonds to move higher, which means long-term interest rates move lower. Why? Because we're going into a recession. That will dampen inflation. Here's our bond key indicators. Up here, 10-year treasuries in Germany going down. In the background here, CRB going down. But gold is going up. So 2 out of 3 indicators are saying lower interest rates. 1 indicator saying higher. But if interest rates are going lower in the US, that's not bullish for the dollar. So look for the dollar to remain under pressure and to break these lows that we made in February. Big bear this year in the dollar. But that means gold is going to move higher. The fundamentals of gold are slowly but surely moving to a more bullish scenario. 2 weeks ago, we had 1 neutral, 2 bearish. We're now up to 2 bullish, 1 neutral. So that's going to really help out the gold. Now, gold won't go into a gigantic bull market, but once again, if we got two indicators bullish, we got to be looking to get long gold or gold stocks. Now, I haven't put any trades on myself, but I think by next week, we'll be back into the gold market. Tepidly again, not wildly, but tepidly. If we're going into a recession, you got to sell crude oil. But the purple predictor keeps hanging out at high levels. So I can't get short because of the discrepancy. What you want when you trade is you want everything in your direction. You want to reduce the amount of risk. But if the smart money's buying, but the price action is bearish, you got an inconclusive situation. So the best thing to do is to take no risk. Sorry. Bitcoin. An interesting point here too. Some people said on our YouTube channel, oh, well, it's a flight to quality. It's a safe haven. Safe haven? Safe haven? Yeah, but my money was at FTX. Was that a safe haven? No, I don't think so. Purple predictor very bearish here, although it did perk up here, so that's helpful. But once again, I have this gigantic bear move in the purple predictor. We have a bear move to here, and then all of a sudden a bull move. So it's a gigantic neutral formation, making higher highs and lower lows. The best thing in that kind of a situation is to stand aside and do nothing. All right, freebies, love having you here. We will talk to you next week. Hey, freebies, you know we love having you here every week watching the free edition of Wall Street Winners. But let me give you a little bit of a pitch of why you should actually upgrade and get the fully paid up member version. The big difference between them are two big differences between the freebie and the fully paid up version. Number one, the fully paid up version has more extensive analysis, which means that the prognostications are more accurate and you get greater insights into what is actually happening in the market and why it's going to happen. But we're also talking about the dollar. We're talking about the bond market, the crypto market. But of course, we focus on the stock market. So better, greater, more analysis so you understand what's really going on and how reality is creating profits and how we're going to create profits in the market. Number two, and this is most important, there's actual trade recommendations. So in the freebie section, I say, well, I'm bullish on the dollar, or I think we're going to have a dip in the market and then an explosion to the upside, whatever I'm saying. You want to be able to see what I'm actually doing in the real world. So I put out specific recommendations. Now, these recommendations are actionable. They tell you exactly what the stock is. They tell you exactly the price to enter, and I tell you exactly the price to exit. So there's no doubt you can take action and you can make money. We're pushing 3 decades of publishing Wall Street Winners, and every year has been a winning year. I don't care if it's a bull market. I don't care if it's a bear market. My job, because I am a professional investor, and I do the same trades that I recommend to you, by the way. I'm putting the same orders in. So you and we're going to see the same profits. But here's the point. As a pro trader, my job is to make money trading every day. Every day. I wish I could make it every day. Every year, okay? Every month. Because I need to know I want to buy steak. I don't want to eat oatmeal. You got it? All right. The difference between Wall Street Winners and all the other newsletters out there are, number one, I'm a professional trader. They often are amateurs. Number two, I ran the top performing global macro hedge fund in the world. How many of them have ever run a hedge fund, let alone a top performing one? Hulbert rated this newsletter, Wall Street Winners, as the best performing newsletter ever. Number three, I also manage the number one growth mutual fund in the United States. Quick! How many newsletter writers have ever managed a mutual fund, let alone a high performing one? So what you're getting is my 50 years of experience at picking stocks and making money. That's why you should subscribe. This is a newsletter that doesn't cost you anything. Yes, you have to pay money every month, but the profits from the trades should more than cover the cost of the subscription. So this is a free newsletter if you take action using the trades that I put in here. Anyway, I hope to see you upgrade and become not just a freebie member. You know we love you, but we'd love to even have you come as a fully paid up member and get even more value than you're getting now. All you have to do is go to WSW2021.com. That's WSW2021.com. Sign up. Let's get going. I want to share greater analysis and great trades with you. We'll talk to you later. Thanks very much, freebies. You know we love you.